Hello, everybody. Welcome to this week's session. I think if you are an economics student or you study the economy, you you will by now know that the repo rate has been increased, which means that the prime lending rate has also increased. So I just want to break it down, what it means and why actually did they increase it. Okay, I actually made a video back in 2020. About the impact of cutting down the repo rate. This was when we were deep in the lockdown, when they have actually decreased it to a much lower rate. At that time, it was trying to help the economy, to boost the economy, because the economy was struggling at that point. Okay, because there was not much happening in the economy, right? So they've dropped it up until 3% at that stage. Okay, so now they've increased it just now in November from 3 to 3.5, which was expected, because remember, this was just redirecting the course. So now they are correcting the course in a way, because if you remember in 2020, when it actually got reduced, it was around 10.5%, the prime lending rate at that point. And now it was, before they increased it today, it was 7%. Now it has been increased to 7.5%. So what does actually this mean? First, let me maybe clarify what the repo rate is for those people who don't know. So the repo rate is the rate in which the interest rate in which the Reserve Bank borrows to other banks. Like if we are in South Africa, we're talking about your Standard Bank, your ABSA, your Nedbank, your FNB, your Capitec, and all those big banks, right? So they borrow money from the the South African Reserve Bank, with what we call the repo rate or repurchase rate. Okay, and then there is what we call the prime lending rate. The prime lending rate is the rate in which the major banks borrows to the consumers. The consumers, in this case, it will mean it is you and I, right? So this is the rate that they will borrow you, like a car, a home loan, and all those other things. So this is the base interest rate they've used, right? So which at this stage have changed from 7% to 7.5. On the other hand, the repo rate has been increased from 3.5% to 4%. Okay, so what does this actually mean now? So to the average consumer that is out there, it actually means the cost of borrowing money is much more expensive than it was yesterday. Okay, so this is what it means. It means now, if you are borrowing money, you will be paying actually more, right? But on a short-term basis, it is not much. But if you're looking at it in a long term, it becomes very much expensive. Okay, so this is, we predicted this, that as it has dropped, because that drop that it had, it was like a 60-year like we went back 60 years in time to get to that level, of which it's a very a long time to get to that, and it was caused by COVID. But now, as we are returning to life as we normally had before the COVID or the pandemic, it means also in terms of the economy, you will have to get back to that level. We'll have to get back, but they will get back gradually. Okay, so it means in this year 2022, we should actually expect that it will increase maybe 4 times or 5 times the interest rate and the repo rate, right? So meaning that from here going onwards, the cost of borrowing will becomes much worse, and much worse will become much expensive rather than being cheaper. Remember when I made the video at that time, if you have not watched it, it is really the opposite of what I'm about to say here. But another thing, just before I continue with it, I want to explain why are they increasing the repo rate. Okay, so the South African Reserve Bank are only really responsible, or their main purpose is to drive the what we call the inflation, right? And they must keep this inflation less than 6% and more than 3%. So this is the balance that they must strike in order for the economy to be properly running, right? Not that it is properly running, but that's what they aim to do. So it means, as you know, if you are going towards the 6%, it means now things becomes much expensive, like your food, your bread, your oil, your everything becomes much more expensive, because this inflation is based on the consumer price index, which is the CPI. I've explained into details on the other video, which you can just research, search on all my videos, and then you can find this video that explains what a consumer price index is, right? So now, to keep this inflation in check, because if we are looking at last year around November, just before they've increased the inflation was going towards this 6%. Even now it's going towards this 6%. So now, to control it to not go out of hand, they need to increase the interest rate. So this is really the main reason why they are increasing it, because they just want to balance the act in the situation, which is it's not like the optimal solution, but what exists in their hands is really not gonna be an optimal solution per se. So this is why they are increasing the repo rate, which has a direct impact on the prime lending rate. So what does it mean for you and I, right? As I said, you can anticipate that they're gonna increase this repo rate 4 times minimum this year, right? So it means the cost of borrowing will only become much more expensive from here, and it means now, if you in a short term, like between 1 year or 2 years or 3 years time, you are intending to get some debt, it means you must know that that debt is going to be much more expensive than it is now. So I deal with houses. I sell houses, I buy houses as well. So what it means then for me, if I'm a home buyer, it actually means that actually I should try to beat the repo rate increase again, and fix my interest rate, so that when that time comes, when they increase this repo rate again, it is actually going to be cheaper for me, because I've actually fixed my interest rate. Because for sure, from here, they're only gonna increase it. I don't think they will decrease it anytime soon. It took 60 years for them to decrease it to like 7%. How long again do you think it's gonna be at that decrease, at that level again? So this is the things that you must think about, right? So this is what I wanted to address, to let you know of what is actually the repo rate, what it actually means, and why they increase it, and what you can do if you intend to involve yourself in debt in the next year or two, because for sure the cost of borrowing will only increase from here. So if you are thinking of buying a house right now, I think now is the right time to do it, because if you wait any longer, you are going to pay much more than you will pay if you actually buy now. Okay, so this is what you must actually take note of. Also, it means for people that are actually selling their houses, it means now, because some buyers are seeing this impact of the repo rate increase, they can actually from their side anticipate that now the increase is going to only become more from here. It means now there's going to be more buyers that's going to flood the market, which means that if you're a seller, it's quite an exciting time for you, because if you put your house in the market, there will probably be more people that are willing to buy your house. Okay, so this is it for this week. So if you've watched until this far, it means this video have added value. So it might add more value to also your friends and family. Please like, subscribe, and I will see you in the next week.